10 Safest Investment Options in India. If you are planning to grow your wealth, there are a large number of investment avenues available, a section of which are risk-free ones, operating on fixed income instruments, while the rest are market-linked with varying degrees of risks involved. Here one needs to choose the option that best fits his/her agenda. For that, it's crucial to analyze one's requirements and risk appetite. If you fall in the category of risk-averse investors, it's important to stick to the safest investment plans. 1. Fixed deposit, FD. Offering a much higher interest rate than a regular savings account, fixed deposits with banks are still considered one of the safest investments. This is because, here your money is locked in for a pre-specified term at interest rates varying over the amount and tenure of deposit, the bank and the residential status of the account holder. The one-time investment stays safe with the bank, with hardly any probability of defaulting. Specific 5-year tax-saving deposits also offer you tax deductions up to 1.5 lakh rupees a year under Section 80C of the Income Tax Act 1961. Thus, features of this investment option include guaranteed returns and remains the best pick for those with low risk appetite. Facilities like partial withdrawals and loans against deposits are also available. 2. Life insurance. Life insurance plans are one of the most prevalent and safe investment options available out there. With a life insurance, you get a maturity amount at the end of your policy tenure and get a life cover to secure your financial future. Life insurance also helps you save tax as per prevailing tax laws U.S. 80C of the Income Tax Act, 1961. 3. Public Provident Fund, PPF. A government-backed investment scheme, the Public Provident Fund, PPF, allows you to save any amount within the range of 500 rupees to 1.5 lakh rupees per year and enjoy full tax exemption under Section 80C of the Income Tax Act, 1961. With the backing of sovereign guarantees and assured returns without any link to the market, PPF continues to be a popular choice for growing your wealth, offering compound interest at 7.1% currently. The scheme comes with a 15-year lock-in period with partial withdrawals allowed from the 7th year onwards under specific circumstances, making it a great long-term investment opportunity. You can choose to either receive the full corpus or extend the deposit for 5 more years upon maturity. 4. National Pension Scheme, NPS. Are you a risk-averse individual worrying over your retirement, looking to create a corpus or ensure a steady flow of income in retired life? The National Pension Scheme can be a wise choice because it enables you to build a corpus over long term by investing your money into a portfolio of liquid funds, corporate bonds and fixed deposits to fetch returns as high as 10 to 14% in a government-managed mechanism. It also offers tax benefits in terms of a total deduction of 2 lakh rupees under Sections 80C and 80CCD, 1B. Any Indian employee can open an NPS account, choose a preferred portfolio and invest till retirement. Upon maturity, a portion of the corpus can be received as a lump sum and the rest has to be used in buying an annuity plan that would ensure a monthly income in your retired life. 5. Gold. For ages, gold has been considered a safe investment. Buying gold jewelry, bars and coins or investing in sovereign gold bonds or gold ETFs doesn't just contribute to wealth but can aid you in hedging inflation as gold prices has an inverse relationship with the stock market. Moreover, as gold prices didn't go down considerably over time, it also ensures capital protection. 6. Savings bonds. Introduced in 2018, the GOI Savings Bond offers an annual interest at 7.75%. Wrapped in sovereign guarantees, these bonds help you retain and secure your capital. On the other hand, while you can start with an investment as nominal as 1000 rupees, the interest rate ensures guaranteed returns and growth of your money. 7. Recurring deposits. Alongside FD, another option of a bank-led investment scheme is recurring deposits. In this, you invest a fixed amount of money in a predefined schedule at a much higher interest rate compared to regular savings accounts. Thus, while RD helps inculcate a habit of saving, returns are assured too as there's no link to the market. Recurring deposits also enable one to start with a small sum of investment. 8. National Savings Certificate. Purchasable at banks and post offices, the National Savings Certificate, NSC, is a government-backed fixed income investment scheme. Here, one has to invest at least 1000 rupees, followed by multiples of 112 equal investments, or make the entire deposit in one go. With a lock-in period of 5 years, NSCs provide interests at maturity at a rate fixed by the Ministry of Finance. The investment also fetches your tax deductions up to 1.5 lakh rupees under Section 80C. 9. Post Office Monthly Income Schemes, POMIS. The Post Office Monthly Income Scheme, POMIS, is offered by the Indian Post. Single, joint, guardian of someone with unsound mind or minor account options are available to invest a minimum of 1000 rupees. The maximum permissible amount for investment is 4 rupees. 5 lakh for a single account and 9 lakh rupees for a joint account, respectively. 10. Senior Citizen Savings Scheme, SCSS. Senior Citizen Savings Scheme, SCSS, is a scheme by the Government of India specially designed for investors over 60 years of age. It has a guaranteed rate of return that provides a steady income stream and tax benefits, making it a low-risk option. Generally, the SCSS offers a higher interest rate than other options, making it a good option for senior citizens.
Don't forget to like and subscribe this channel for more informative videos.